All right. Yields have been going up because of all the news we've had, which means fixed rates have been steadily going up the past 2 weeks, which tells you a tale about proactivity. A lot of our clients who we've reached out to, who follow me, they were getting the advice of, hey, if you're in a 3 year fixed that you took 3 years ago, those rates started with a four handle, a high four, or they started with a five, and in some cases, even a six. Do your early renewal as soon as possible. Get to the lower interest rates now, especially once it became obvious that there was going to be some disruption with Iran going on. And many of those individuals have saved money. They now no longer have to worry about this situation. They've essentially renewed their mortgage early, got their rate, most of whom started with a three handle, which is slowly disappearing, by the way, and they are good to go. Same thing with the clients who were proactive about their rate locks when it came to their refinances or their purchases, because many of those individuals now have interest rates that are no longer on the market. And as the market gets more and more volatile, there's less and less banks offering discretionary pricing. In fact, we've received messages from a few of them already that discretionary pricing is currently off the table. It is whatever the rate sheet is, you're getting that. Just based off of the market and the volatility, right? So it pays to be proactive. It pays to get those rate locks early. It pays to, in some cases, early renew if it was in your best interest at the time to do that based off of the interest rate that you had versus what the interest rates are being offered. Trying to time the market and beat it, not always the best. Some people can do it. Very few people actually can do it successfully. As we've learned in the past 5 years, so many things can be thrown at you that can change your whole plan and also change what you're projecting. Predicting is a loser's game, as a lot of people like to say, because anything can happen. The longer you project out, the more difficult it is to do those predictions. This also is important when it comes to the Bank of Canada. The obsession with the Bank of Canada meeting this week, to me, was laughable, because when other things are going on around you that are directly going to affect your mortgage rates, as in it's going to affect your mortgage rates right away, the Bank of Canada was going to hold for sure. Why even focus on that? You have to focus on the markets and what's going on here, especially if you're a fixed rate borrower. This is where you should have been focusing.